Perfect. Let's rock and roll. Go ahead.
Hey, thanks so much. All right. Well, I'm glad to kick it off and glad to have everybody with us. And it's going to be a fast paced session here. And I know you'll get a lot of great education throughout today's event. So, as was mentioned, please make sure you stay around for the whole thing as much as you can to really soak it in. I've had a lot of experience trading options. I started trading options in 1990, fresh out of graduating from Duke University. Kind of made all the classic early mistakes as it relates to thinking I knew it all. I'd done all kinds of analysis. Of course, I got to be right if you do a bunch of analysis, right? Wrong. So, basically, I quickly realized that if I'm going to stay in the game, I've got to get to a more systematic approach. And so over the years, I launched Big Trends back in 1999, 20 years ago. And over these years, a lot has evolved. As you're seeing with trading, a lot of things that are happening is that there's a lot of tremendous volatility out there. And we think, of all the strategies that we do at Big Trends, this one I'm sharing with you today really has some of the greatest growth potential in the shortest amount of time. These are trading weekly options, which are options that expire for us, usually about a week and a half away from expiration. We don't trade them a couple of days before expiration. We give it some time, but you got a weekly options expiration every Friday now going out for the next month or two on the big stocks. And the FANG names, Facebook, Amazon, Apple, Netflix, and Google, are tremendously liquid and active and volatile. And so you get an opportunity to trade them both up and down. And we're going to walk you through how to do that with a really simple approach and how you can take advantage of real-time alerts from us at Big Trends on a special that we've set up for you at the end of the presentation. But just remember, everything that I'm sharing with you is for your information education only. Nothing is a specific recommendation to buy or sell anything here. You know that you are solely responsible for your own investment decisions. Big Trends and its staff are not responsible for any trades you choose to make. Let's face it, every trade strategy involves risk. We'll talk about how we manage risk, but you've got to keep that risk in mind. We don't provide any personalized financial, tax, or legal advice to any individual, but what we do instead is we send out our live signals. We get a buy or a sell on a new FANG bull or bear option trade, and we tell you what we recommend for our subscribers to buy, and also, more importantly, we recommend when to get out, so we never leave you hanging. You decide how to implement that. You can also have this service auto-traded for you through select options brokers. Consult your tax advisor, too, before you make any investment that's going to impact your tax situation. You probably already know about the FANG stocks. We'll briefly go over that and then get into why I really love weekly options on these higher volatility FANG names. I'm going to be giving you a very meaningful specific that's worked well for me across a lot of time frames. My number one indicator to define a trending stock. Let's face it, obviously I'm talking about bigtrends.com, but we want a trending market regardless of whatever strategy we have. Whether you buy options, sell options, do iron condors or anything else, or even just trade stocks or trade whatever vehicle you like to trade, if you know this trending setup, I think you'll get a lot more meat out of the trend, and that gives you a lot more potential in your trade to catch it early enough, not too early, but kind of just right, that sweet spot, and also know when to get out too. So we're going to model a lot of case studies about what's worked for us and where we got in, where we got out, and show you how to manage that trade. Now, like I said, the big FANG names, originally the FANG acronym came from Facebook for the F, Amazon for the A, Netflix for the N, and then Google, which has since renamed itself parent company Alphabet. Don't ask me why, because we all still Google when we search for something. At google.com. But the bottom line is that those are the original four. We've said for years now that Apple should be a part of that mix. And you're starting to see more people talk about FANG with two A's in the middle of it as the acronym. But basically, that's Apple just a big part of this. All these are big leading companies out there. They have a technology component. Amazon, of course, is more of a retail company, but driven by the power of online business, they now drive more than 1 out of 3 e-commerce transactions. I think that's an amazing stat. Probably explains why Jeff Bezos is the richest person in the world, because basically, he's just driving so much business from the bricks and mortar through the online channels now. But as you know, Facebook's been in the news a lot about privacy concerns or whatever, but the stock's been roaring. So we trade what we see. We trade what the indicator tells us and the system tells us to get in when it says to get in and get out when it says to get out. There's no opinion being added here. There's no, I feel like that's a bad signal, let's not take it. There's none of that. It's basically, let's follow the system and let these names drive our success. Speaking of success, obviously past performance can't guarantee future results, but this is our results just from the beginning of last year, which, last year was a down year for the market. The S&P was down 4.5% or so, and we were up like over 50% on a gross profit basis. This is if you assume you put in no more than $1,500 into one trade and say, okay, when you add up all the gains and losses, how'd you do before you factor in whatever your unique commission rate is? We're only buying an option and then telling you when to get out of that option. We're not doing any spread, so the commissions are much lower than a lot of the spread trades out there that people like to do. So you can see $12,360. This assumes you probably have a $10,000 to $15,000 portfolio as a starting point, and you can see you essentially would practically double that over about a year and 7 months, just over a year and a half now. You can see 2018 was good. 2019 so far has been even better, and we're not even done with the year. We were up, like I said, over $5,300 in 2018, and now pushing over $6,900 through the first 7 months of the year. That's like $1,000 a month on a $10,000 model portfolio. That'd be like a 10% a month return, assuming no compounding. Now that's gross before commissions. Take your commissions out of it, but you still have a lot of meat on the bone left over after you do that. Now, what's the pattern that we're going to talk about today? This green line here is what I really want you to focus on, but we're going to explain all the other lines that go with this here. The green line is the ADX. It's called the average directional movement. And this is something that should be available on just about every traditionally good charting platform out there, okay? So anything that's got some extensive indicator set should have the ADX on it. Now, the criticism of ADX initially, and this is essentially showing me when it's rising, ADX should be showing you that it's a trending market. The criticism of ADX was that just because ADX is going up, it doesn't show you what direction. And so what we did is we said, you know what, let's put the two directional movement lines on the same chart with ADX. The negative one shows you when you're making new lows in red. The positive one shows you how much new highs you're making, which you can see you're not making any new highs. This was on Amazon late May, early June. And this is a case where we got this signal right as we start to see ADX turn up off a low level and start crossing up. That's what we look for, is a very specific pattern. So we're not going to trade every single time ADX turns up. We're only going to trade it when it's been low and now it's turning up and sets us up for this bearish signal here. So at the close of that first half-hour bar, we use 30-minute bars on this indicator, so you can really take advantage of this and say, okay, you know what? There's our sell signal. What's interesting about this sell signal on Amazon, that was on a Friday morning, May 31st. And that was about 1780 on the stock. Now, most people never trade Amazon because they're like, it's too expensive to trade. If you are buying 100 shares of stock or selling 100 shares in this case, that's like 178 grand on 100 shares of stock. That's a lot of dough for the average investor or trader. Well, what we do is we convert that into an option trade where we never pay more than $1,500 for one contract. So in this case, we're paying an average price. This is based on our auto brokers telling us what they got in and out at. We use our real world auto broker experience, getting our clients who auto trade the service, who just let the brokers handle it for them. More on that later. That basically then you send no extra charge on what you do on their platform yourself. It's $1,417 average entry price. Okay, so they're quoted at 14.17, but you multiply times 100. Now, in this case, you say, look, that we expect that if we get a double, we'll take that double and run. Now, in this case, that first day on that Friday, it didn't do a whole lot. It edged. It actually went against us, you can see initially. And by the way, I know a lot of people say, I don't use indicators, I just trade pure price action. How many times, if you see this brief little uptick against you, are you going to blow out of the trade, and then are you going to have the guts to come back into that trade and say, well, I just lost on that last one, I'll take another shot? No, usually after you get burned once, you're like, burned me once, shame on you. Burned me twice, shame on me, right? And it's like, now we're saying all we need to see is that green ADX line is still going up here. So it can go up more slowly, and we can still stay with that trade. But you can see here that instead it starts coming down into the close. But you can see even by the close, it's moving a little bit in our favor, maybe about 5 points on Amazon. Sounds like a lot, but really by Amazon standards, that's not a lot. That's less than 1/3%. And you're saying, okay, now you're left with a question going into the weekend, do I still hold this trade? Well, our system says you keep riding the trade. If the trend is still working, ADX is still rising until you get a double or until you get a reversal, which we'll talk about on our trailing stop rules. And you see the next Monday morning, Amazon starts gapping down and shooting down so fast. We get the alert out there to take the double or better, and it goes down so fast by the time we get filled in this first pop down here that we're actually getting out much better. That's an anomaly. I would say usually don't expect when I show you numbers more than 100%. Just assume you wouldn't got a double on that trade and said that's good enough for me. But sometimes we get lucky on a windfall gap in our favor. Every once in a while we get unlucky and it gaps against us, and we try to use our first stop loss at minus 50%, but then we start trailing our stops to tighten them as we start making money on the trade. We'll talk more about how to tighten your stops. Now you can see, technically, we could have made a little bit more money by the time that ADX rolled over in here another day later, or actually later that same day, maybe right into the close. Maybe we could have made a little bit more money, but we don't want that risk of reversal. Our testing shows that once we get a double or better, we're usually better to book it than try to keep riding it and then risk a gap against us the next day or even intraday flip. So from this perspective, you can see also when ADX starts going down here, that doesn't mean that necessarily it has to keep going the other direction. It just means it's not a clear trend anymore. So we just want to trade the phase here while ADX is rising. If you go and look at this chart, obviously the best part of this trend is when ADX is rising, and then essentially we're done with it when it's not rising. It's too choppy, especially if you buy options. You can't afford to wait. I'm sure a lot of you can relate to the idea that, and I'm glad to have Chris there and with us to help answer some questions. So basically, essentially what we're looking at here is, how to catch this sweet spot, the speed of movement phase here. Now, you can see here, this one on Google was starting to turn here off of a low level right here. This was April 22nd. Just starting to get going. You can see the price action has already started to break out. Sometimes it'll be before the breakout. Sometimes it'll be in the middle of a breakout. But we were really trying to catch that trend phase because, a lot of people will say the trend is your friend in trading, but I like to say in option buying, typically the trend is your only friend, right? That you need that speed of movement. And so you see things are heating up on Google. The great thing is that, if you're a candlestick follower and you get a couple of candles in your favor, then you see this brief little consolidation here. A lot of people say, uh-oh, that looks like a reversal. Uh-oh, it's starting to close below that prior bar's low, et cetera, coming up with reasons why they don't want to hold on. And that makes for less profitable trading, because you see we make a lot more money by riding this to its double target, but it also makes you much more skittish in the way that you trade. I find that I'm much more calm. I can actually slow down momentarily and say, I'm going fast because I got a lot to share with you here, but essentially saying, you know what, we really want to be in a position here of saying, how do we go ahead and allow ourselves the ability to take advantage of this speed of movement phase. So, essentially, we're really looking at a situation here in which we're just riding that trend. Now, again, we got out a little bit before ADX rolled over here. And you see, so we're out there. It turns out it was about near the top anyway. So you'll see in some examples where it saves us from that reversal. Now, usually in this next swing here, I'd ask you a question about what type of trader you are. They've got me as a presenter only, so I can't really see the questions. But basically, most of the people would tell me they're about swing traders 3 to 5 days these days. Some people would say maybe 1 or 2 days day trader. We're about a 1.5 here. We're somewhere looking at typically a 2 to 3 day window here for our FANG system here. So we're looking at we don't really want to day trade. Sometimes if we get our profit in a day, or if we hit a trailing stop loss in a day, we got to take it out the same day. But most of our FANG trades are averaging a couple of days. And so that way you're not worried about day trading. Now you may worry about missing a signal. So that's where the auto trading can be so effective here at taking advantage of this. But this is definitely something that if you're a position trader, say 1 to 4 weeks out, you could use the same ADX setup that I'm talking about. All of our FANG traders get our specific FANG settings and ADX settings when they sign up as a FANG options trader subscriber. But, regardless, even if you're just doing this yourself, you just change your time frame. So a position trader 1 to 4 weeks out, I would say look at a daily chart. Classic 5-day swing trading, look at probably a 60-minute chart. Active investors 1 to 12 months out, look at a weekly chart. You use the same principle, but just change up your time frame. I'm on a 30-minute time frame here, but just you can experiment with it on your end at home, and I think you'll be pleased with how well it catches the early and kind of sweet spot middle phase of a trend. And so you see here, there's Netflix 3 different times. Oh, by the way, we've got a moving average filter we use. This moving average filter here on this chart in black here is actually showing you that we're in a negative below the moving average trend here. So that will not allow us to take a bull setup on the DMI and ADX lines. Now we've got the ADX line in yellow, and you can see when it crosses here on these points of interest, you can see that we took those 3 signals. And you see there was a signal we didn't take here. and basically it's because we already had 2 other positions on. If we had taken that signal, would have been a slight loss on that one. But basically, you can see this one was a 47% gain, then a 49.9% gain, then about a 3% loss over on average about 2 sessions. Usually you'll see a lot of our trades will come in fairly early in the morning, because a lot of what happens with ADX is based off of the gaps. And so the gaps can really create a lot of opportunity for you to get a trade started and also to cash in on a trade. Here's a case where we bought Netflix puts. We paid less than the $1,500. We paid $869 on average for a Netflix put. Stock was trading about 275. You can see because of these stocks haven't gone up so much, we usually have to buy them a little out of the money for the Amazons and Googles and Netflixes. Apple and Facebook, we can trade them more in the money to be a little bit more like a stock substitute on Apple and Facebook. But these higher price ones, we got to go a little bit on money because we don't want to pay too much for an option contract. So we pay $869. If we need to double that, we're taking it up to in the neighborhood of about $17.50, right? So you're saying, look, this is a situation here where you see that we're getting that initial kind of slow start. You see the stock has already broken down on a price action basis below 280. And how many times do you see it where you see a breakdown, but you go, oh, I think it's moved too much already. I've likely missed it. I know in my early days of trading, I'm raising both hands here in Lexington, Kentucky, in our Big Trends headquarters, saying, you know what, early on, I missed so many great trades because I was just afraid, frankly, that I'd missed it. And afraid that, of course, right when I get in, it's going to do what? It's going to reverse on me, right? I had this sort of conspiracy theory of trading, and I think we've all been there at some point, right, thinking that by the time I get in, they're going to flip it on me and I'm going to get knocked out. So I'm sit there, do all the work, and then end up watching a trade that ends up going on to be a big winner, and I'm on the sidelines. I don't know about you, but there's not much I hate worse than doing the work and then not getting paid for it. The other thing I hate worse is that getting whipsawed by a good trend. That's why I don't just use price action. I use indicators that can smooth out some of that noise, because I do believe the noise has dramatically increased from what it used to be back in the pre-internet era. And that's because there's just so many more people that have access to the data moment by moment and can take a position and thus create this kind of volatility. So you look at this, you say, well, there's our ADX cross, and that initial slow move in our favor. This also is coming in right around the Thanksgiving Friday after, or right before Thanksgiving, I guess it was, on the Monday the 19th, and then the next morning on Tuesday the 20th. We closed at 270. The next day we're opening at 255. So we're to the good by about 20 points on this position. Think about 20 points on a 275 stock, $275 stock. You're talking about somewhere in the neighborhood of about a 7 to 8% move, 7.5% move in your favor, and we're making 109% on the gap down. Anything over a double, we just call it a windfall and take the double or more. And you see in this case, if you wait for ADX to roll over, look at what happens. You give back all your profits. That's how volatile some of these names can be. That's why we think it's important to have profit targets and trailing stop rules to manage that volatility. We use a lot of platforms. I'm showing you a lot of charts off of TradeStation, but Thinkorswim is actually one of our auto trading brokers. Metastock's been a great partner for us over many, many years. So there's a lot of platforms you can use here. We're talking about the DMI lines and how they kind of show you what direction the trend is with ADX. We're going to talk about average true range. That the guy that developed this indicator, Wells Wilder, kind of came up with this concept of average true range. All this with the moving average filter as well creates our trade funnel. The idea of a trade funnel, of course, is to narrow your focus down to the best of the best. And that should be where you've got the better dollar opportunities for profit, right? That if you're talking about something where you're trying to trade everything, you're going to probably burn yourself out, not just mentally, but also financially. Here's one that didn't get to double and show you how we managed the trade. Google just started to pop up above the moving average filter. It only takes one close above there. This had 2 closes above there. Stock's trading about 1057. You can see, by the way, if you wait until it like breaks out through that old high here, you're going to give back that next move there is about 1067 here. You give up about half of your profit potential on the trade because it goes to about 1077. And then our trailing stop hits when we typically come off of a high. If we haven't doubled, in this case, say we hit about a 75% gain, we give back about 30 percentage points of our peak profit, then we tend to take it out. It was taken out at about a 44.75% profit the same day because our trailing stop was hit. Notice when the ADX rolls over the next morning, you'd actually be out at a little bit worse level here. So you lose time and you lose price action, and basically that's a bad combination to lose when you buy options. So we really want to manage that trade intelligently, give it some room to wiggle, but not get truly reversed on. Wells Water, the same guy who developed the RSI, Relative Strength Index, that a lot of people know is a favorite overbought, oversold oscillator. But he said, you know what, about this directional movement concept, he said a lot of people call the range for a stock the high-low range for the day. So if you look at your typical open, high-low, close chart, they're saying, well, there's your low, take the high, and that's your high-low range, the quote range for the day. Then you get your next bar saying a gap up here, and then it closes here. And Wilder would say a lot of people would call this range, we'll call it R. They say it was a pretty tight range for the day, right? On that second bar. But Wilder's saying, hold on, wait a minute, folks. You're missing something. There's a big gap from the prior day's close. There's a prior day's close in this dotted line. They say, you know what, from the high down to the prior day's close in the case of an up gap, that your true range is more than double what your daily high-low range was, right? So your actual true movement that you're getting is a lot greater than what most people were in the day recording as just that day's high-low range and adding those up. So this shows you a lot more total movement that you're getting in a trend, and thus then you start to break it down into how many new highs you're getting, new lows you're getting to say, okay, if we're in an uptrend, we should be getting higher highs and higher lows. That DMI plus would be going up, the DMI minus would be going down. When that happens, that will push the ADX up because the ADX is measuring the gap between those DMI plus and minus lines. So when the gap starts widening, that says, hey, something's happening here. We've got a trending kind of action in the market starting to develop or in progress. And then he said, let's compare apples to apples or apples to Facebooks by making it a percentage basis, since some stocks are at 1,000, some stocks are at 100, et cetera. So you can start to compare ADX levels and say, here's an interesting one with Amazon. The day after the midterm elections, the next morning, November 7th, got this big gap up in the markets here. You can see we've been down, and look where we close here at the first half hour there. You see that we close just above that moving average filter in black. That counts as a plus, a positive filter now, and we've got the bullish configuration. You get this big expansion of the gap between the positive directional movement surging up and the negative directional movement surging down. That's pulling that ADX up. This is a case where our trailing profit rule actually cost us a little bit, because you see ADX went up all day. ADX is rising in green. That's the thing we usually want to follow. But our profit protection rule says, you know what, it's starting to reverse a little too much here. Of course, Amazon and Google especially are more volatile, as Amazon's pushing up recently towards 2,000, come down a little bit after the earnings report this past week. But, bottom line is that, these can be more volatile, so we want to not give up too much profit. So again, we hit our trail up and we made 43%. That would have doubled later that day if we just rode the ADX line. There's some times where you say, it would have doubled. But there's other times you say, hey, if you take a 75% gain down to nothing, I'm going to have a lot of unhappy subscribers who say, why'd you let all that profit slip away, right? So basically, we're trying to manage it for knowing you're getting a more consistent experience. And that's really important to us. On the downside, here's a case where Google's breaking down. You see this breakdown here. We're not early here. We're catching the tail end of a trend in an afternoon, and then the next day it pops down a little bit more. But you see that first half hour starts to reverse back up here. And as it starts to reverse back up, that allows us to protect our profit. We just missed getting our double. We hit about a 90% gain. We're out at about a 60% gain as it starts to reverse. Good thing we got out there, because you can see if you wait for the ADX flip, that's happening at a worse level, at a higher price. Remember, with a put, you're betting on it going down. So if it starts going up, you've got problems. And you see, of course, that then we're just waiting for that next signal. What about what looks like a positive configuration happening over here on the far right? Would we take that trade? Absolutely not. We're way below the moving average in black up top. So you are filtering out some of your less successful, lower probability type of signals and getting the higher probability signals working for you. Now, the goal is, when we started this, we said we like to use in-the-money options exclusively, because Amazon was below $1,000, Google was too, Netflix was down in the hundreds range, not the 300s or 200s, and of course Apple and Facebook have rallied a lot now too. But with Apple and Facebook, we can still typically buy an option in the money like this, and instead of buying the house, we can rent the house. Same thing with an option. Why buy the stock when it's cheaper to rent it with the stock? I only want to be in Florida in February versus, for my Kentucky weather here. It's cold here in Kentucky in February. I want to be at that sunny climate in February, and I'll pay a premium for that, to not have to own the house the other 11 months of the year and have the flexibility to move from place to place wherever I want to vacation or visit or whatnot. go where the sun is shining, right, and where it's cool when it's really super hot in August and September, right? Get north. So bottom line is that you can see if we're only spending $1,500 to control a stock that's worth more than 100 grand, you get leverage of 70, 80, sometimes 100 to 1 or more, like with Amazon. The other beautiful thing here is that I've even had a shift in my 20 years running big trends and how I like to think about what kind of option I want to trade. And it's based on how much money I can make on an option per a one average true range percentage move. So in the olden days, I would say, you know what, you want to have a super high delta. So like Humana in this example has an 80% delta. Netflix only has a 60% delta. The options are priced the same. Why is Netflix in a lower delta? Because it's got a higher volatility associated with it. The ATR, the average true range percentage of Netflix, is 4.25%. For Humana, it's almost half that, 2.25%. So you can see that while you're basically paying a little bit more in time premium for the Netflix option at $9.50, that you're getting actually a lot more bang for your buck, because when you get that one ATR move, the 4.25% on Netflix gives you an 89 and 2/3% gain on that option. Humana, for the same type of option price, only gives us a 57% profit. Now, with that volatility, that could go both ways, right? So if we get the ATR move against us, then you could lose more on Netflix than you could lose on Humana. So it's very important to get direction right with this methodology, or pretty much any big trends methodology. We'd much rather get the direction on our side. And you see, here's another Netflix example where Netflix is just breaking out here. Stock has already cleared the last set of highs. Sometimes that'll confirm a breakout. Sometimes it'll happen even in front of a breakout. So you see different ones here. And you can see there's the occasional red candles here, but we're able to see that ADX line rising the next morning. When it gaps up, we make a little more than the double. And then you see by the time it reverses down, it would have been about a scratch, but you've lost another day of time. Why hang around any longer than you have to? As a long time ago friend told me in trading, a longtime friend said, you know what, one of his mentors said, we are not in the storage business, we're in the moving business. We want to move things along, and if it's not working, we want to move it out and make room for stuff that can work. If it is working, great, keep letting it work until it slows down or starts to have the risk of reversal. While it hits our profit target in our case. So now every single Friday becomes an expiration Friday. If you look at the month of August, the third Friday of August is August 16th. It used to be back in the olden days, the only time I could do this last week or so strategy was just the third week of the month. But now, this coming Friday the 2nd, then the 9th next Friday, so if we were buying a FANG option right now, we'd likely be looking into next Friday, August 9th. Because we typically don't want to give ourselves less than a week. We want to give ourselves enough time for the move to develop. Also, if we get stopped, we want to have enough time value left in that option that we can still salvage a good portion of it. So, this every week looking forward for the next month or more with the FANG options weekly is really nice. You get a lot more leverage, not having to buy so much time. We typically will not buy them right in front of earnings. So you got Apple reporting earnings after today's close. That's great, but I'm not going to buy Apple options here because they're juiced. And we don't want any part of that. You could say, well, you could be in and out before the close, but I don't want to have to overpay for that time premium, and that will really dramatically hurt my leverage. So we will say, let's get this volatility out of Apple. Let's see how it reacts tomorrow morning, and then let's go on with finding where our next clear signal is. You know what that involves? It involves a little bit of patience. When you become a more systematic trader, you're going to find that when you've got a strong edge, all you're doing is you're just waiting for that, as Warren Buffett calls that fat pitch. Warren Buffett says one of the great things about trading is you do not have to swing at every pitch. You can let a bunch of them go by, even if they were good, juicy, meaty fastballs that you thought you could have hit out of the park. You can say, you know what, it wasn't quite the right setup for me. I can keep waiting and waiting and waiting, and I only have to swing when I know I've got a really fat pitch. I mean, that ball looks huge, and I'm going to definitely get a good piece of that as an opportunity. So it's a good reminder, whether you're a 50-year plus investor like Mr. Buffett or whether you're looking at the next couple of days, you can say, look, this is a great opportunity to say, let's be patient and just wait till we get these opportunities. Here's a great example with Facebook where you actually have to endure a little pullback and still have the fortitude to stay with it based on the ADX. So it just broke out on Facebook here, March 4th, big gap up right to start off the day. You see, and of course, you see it opens like 164.5. It closes here at like almost 166, 165 and a half, whatever you want to call it. But basically, you can see here that it's looking like it's starting to go in the next couple of 30-minute bars, and then you get this quick hard pullback, and it drops down just near that longer-term moving average filter, and we're down almost a couple bucks here um, in the first couple hours of the trade. I can assure you that people who just trade price action are not going to have the patience to stay with that trade. Now you notice the ADX, the green line, is definitely going up at a slower rate as that pullback happens. That's going to be a reality. That if that thing had kept dropping, then of course it's going to pull the ADX back down. But instead it kind of flattens out, but it does not roll over, even by the slightest margin here. So even if the slope of the ADX line is just going up at a slower rate, that still is acceptable to stay with the trade here. Now you can see you'd be down a little bit. Here's a great example too. Let's say that you buy a 157.5 call like we did, and you pay about $9 for it. 897 bucks was our average entry. Just call it 900 bucks for a round number. Well, if you're looking at this and you're saying, look, if the stock's trading, let's just call it 165.5, $8 in the money, we pay $9 for it. You paid $1 a time. Now, if it drops $2 and all of a sudden you go, what if you're losing almost that whole premium? Well, your $9 would be down to $7. Probably wouldn't be down quite that much, but let's just assume it was and say, okay, well, you'd be down like 22%. Well, we give ourselves more wiggle room than that on the first trailing stop, and you say, okay, we're not going to get knocked out by that initial bit of noise. You can see if ADX had rolled over, that would be a bad sign. Instead, it then holds in there, then the stock takes off, and you're able to stomach and stay with that initial little whippiness. So let's face it, no trend is a perfect line in your favor. It's about finding where you have an edge, and it's about being able to have the staying power to stick with your edge when you still have your edge. Okay, if you don't have your edge, don't hang around, don't make excuses. But if you do have your edge, don't bail prematurely. Okay, now controlling risk is a big part of this equation. By following the ADX line, by following our trailing stop rules, that allows us to be much more proactive, not so reactive, not so skittish in our trading approach. I find a lot of traders that come into big trends who typically have a lot of what I call scar tissue. That means that you've made mistakes, you've gotten burned, and you're kind of going, I don't know if I want to take a chance on something new. I don't know if I can really commit to it, or they see the potential and then they can't stick with it, and they see a quick 20% gain, they take the profit, it goes on to double, and I'm going, hey, you can't take your profits prematurely here. The way that this works with our FANG Options Trader Alert Service is that we both give you training every week with video training that I do, but we also give you live call outs on where to buy to open. BTO means buy to open this Amazon option. This was done back on the 9th, and we said get in at $14.90 or less, meaning, okay, didn't want to quite pay the $1,500, but $1,490 or less. And we give you the read to your broker instruction, as we call it, or you can place the trade yourself. But we do this so that the auto brokers who handle a lot of our subscriber business, because it takes you out as the middle person, you get the benefit from the real-time execution. You don't insert yourself as a middleman or middlewoman, and basically now you're getting faster executions, you're doing less work, and you're still getting the confirmation of where you got in, where you got out. So very quick, and you see we're firing these trades out in real time after any half-hour close. And so we got into that 1490, ends up going on to a doubler. And so you're saying, look, this is the kind of situation where even with this one on Facebook, what I love about this example of Facebook is you see the ADX crossing here, and you see, okay, that's a signal to buy because the DMI plus is above the DMI minus, right? Pretty simple stuff. But you might worry and say, oh, but it's still below the old highs from yesterday. And you go, oh, should I wait on this? Well, if you wait on this, you're giving up some of your profit potential. Yes, you do have to endure a little bit of kind of sort of it goes up, then it flattens out, even has a brief give back, and then takes off the next morning. But you see, ADX flattened out, but it did not go down here. And so that was interesting how it even as a trend is starting to establish itself, you'll get these test points to see if indeed it can sustain itself. So really, let's face it, you, me, and the rest of the market participants are watching these trends going, is this thing going to continue or is it going to reverse? A lot of traders I find have this desire to call out reversals. There are definitely strategies for reversals, but you have to be very careful in an ADX strong trend in sticking your neck out in front of that, because you can really get your, burned if you're looking at a situation where you're trying to fade a strong trend phase. Of all the phases on this chart, clearly the two best phases here are the one that we're calling out here, where we made a 89.75% gain just a couple days later. And there's this one over here on the left where you say, yeah, I'd like to be a part of that quick little surge. Yes, ADX did surge there, but it was not from quite low enough level. So we were a little picky about it. By the time it rolls over, yeah, you'd give up some of your profit from the time that ADX turned here. You would have made a little money, but not that steady, consistent money that we made when we got in there. So, and yeah, it kept edging up even after we got out. And just because ADX goes down does not guarantee the trend's going to reverse. So, bottom line here is that there's a lot of key elements here, but we've tried to simplify it down for our FANG Options Trader subscribers to one key indicator, one key setup and pattern that you can use again and again and again, like we do, to take advantage of trends and on a lot of different time frames. Once you start seeing the power of this, when you become a FANG Options Trader subscriber, I think you're going to not only be so excited about how you're doing a FANG Options Trader, but also I think you're going to be wanting to convert this into some of your swing to position trading as well, just kind of stretching your time frame out, because it truly catches the sweet spot phases of breakouts and breakdowns in my experience. As I said, I like to buy them in the money where I can. That higher delta gives you more of a stock substitute. When I do it with Amazon and Google, and even now Netflix, I've got to buy them a little more kind of close to the money, but a little bit out of the money usually. So that just comes with the territory. It just makes us a little bit more careful about how we place our stops. Used to be that only an ADX turn would dictate our exit, but now we put in this profit protection stop. So once we get a gain over 30%, we'll start moving our initial stop up to break even or into profit territory on our stop. So you can start making sure you don't let a gain turn into a loss. And we typically ride until an ADX rolls over, or now until we get our profit target of a double or more on a gap in our favor. As I mentioned, I do believe in the consistent training phase, always educating you. So I do a weekly video for FANG options traders after the close every Monday. I just did one later yesterday. Say, hey, here's how all 5 of the FANG names look. Here's the trades that we made in the last week. Here's what we expect to happen over the next week. The Fed's coming up to tomorrow as far as the Fed reaction to whatever the Fed may do. Expectations, they cut a quarter point. Everybody knows that, but the question is, even when they cut a quarter point, how's the market going to behave? That's the beauty of ADX, is it really gets you in tune with what the market is doing, not what you believe the market's going to do. So you don't have to play that guessing game anymore. You just follow the trend. Here's another one like that Facebook example where we get into Google, fresh breakout, but then you've got to endure a couple hours of a sideways, even slightly lower kind of a flag pattern. Just kind of chops, kind of consolidates after that quick surge. But ADX doesn't roll over. We stay with the trend, and you see we're able to thus take advantage of it. Also, look at the end of the day action. That first day we're in the Google trade, you're getting that late day kind of sell-off. I know a lot of traders would see that and go, uh-oh, momentum's waning. I don't feel like giving back my profits. And you see our trailing stop doesn't get hit. We stay with it. It gaps up the next morning. Then we cash out in this first half-hour bar, and then it actually reverses significantly. Would have hit our trailing stop as it flips back over. Of course, the ADX, by the time the ADX rolls over here, you see it, you give back a lot of your profits. So very important to be proactive, and when we get that double, after getting at $1,368, you're saying, okay, we know we're in around 1370. We know we're going to be out around 2740, give or take, right? So from this perspective, and you can see an 1137 call, the stock was trading here in that neighborhood. So we're buying about an at the money option here, maybe just a hair in the money. So most of that option is time value. That would scare a lot of traders away. For us, it actually allows us to take advantage of it. As we mentioned, if you came in late, our best trade in our FANG option service over 2.5 years of trading is the Amazon trade we did there end of May, beginning of June, up 243%. We say don't expect more than a double, but sometimes we get lucky and it goes on for a really quick gap in our favor that next day. So I do believe that when we catch these trends, we're catching institutional money flow in, or in this case out, of Amazon, and they're the ones who are going to drive this trade. If you came in late also, you see that the results we've had, obviously past performance can't guarantee future results. We have a lot of confidence that we're getting just essentially, we keep sharpening our saw and keep getting better and better as we go. I do have that belief that you always want to be learning, you always want to be growing, you always want to be looking at how you can tweak any given methodology so you can make sure you get the most out of it for the best trades that you're on board with, but still getting rid of some of the riffraff, the sort of questionable trades or sort of choppy trades. We've done a lot of that work. Now, usually you'd pay a couple grand for a year's access on my website at bigtrends.com for the FANG Options Trader program to get 100 trades over 12 months, or the 6-month access about a grand to get you 50 trades over the next 6 months. But what I've done is I've set up a special here. When you go to this link that's on this page, we'll type it in here in a minute, bigtrends.com/FANG Options Trader. That's what we call this alert service, FANG Options Trader. You get a monthly rebill for just 99 bucks, so you can try it for the next 30 days for just 99 bucks and lock that in. What I want to do with the few minutes I've got left before we get on to our next speaker at 11:30, is I want to show you when you go to that page at bigtrends.com/FANG Options Trader. And thanks for typing that in for me. I appreciate it. Is you'll see here that it sets you up for this every 30 days auto renew. So if you don't like it in the first 30 days, just let us know before the 30th day that it's not for you and you won't get billed again. We give you several ways you can do that to notify us about that. But it makes it easier for you and for us to not be typing that in every month on your information. So you can also, there's an extra thing I didn't get a chance to mention yet too, which is that if I know I've jammed a lot of years of knowledge into 40 minutes here, but basically you can get my weekly options boot camp, which is actually a 3-series course that tells you more about ADX, more about all the settings, and then how to do this FANG options trading. And then the third session is actually a bonus, which gives you additional stocks you could use, 6 other stocks that you could use in addition to the 5 FANG names that I haven't even had time to talk about, that you can start adding into your mix as well, which includes a name in the cannabis sector, a name in the payment processing sector, a couple of retail names, and another tech name, and more. So, bottom line is that there's a lot of different stocks that you can make this work with. We've gone through and tested definitely many, many hundreds of the key names out there to find the best handful or 2 handfuls that you should be trading with the ADX indicator. That's a lifetime access to that bootcamp course, just for another one-time $100 charge today, and then you just get charged in 30 days for the FANG options trade renewal of just 99 bucks. So for those that buy at 199, no, that would only be a one-time 199, then just 99 bucks like everybody else. 30 days from now, if you like it as much as I think you're going to like it, which is, hey, I know you want to make money. Obviously, I can't guarantee any one trade, but it's one of those situations where I do expect that if you follow this system over the course of the next 30 days, that you're going to be real pleased with your results. And if you're not, I know you're not going to stick with it. So we want you to be set up for that. Also, quickly, if you missed the concept of auto trading, if you're saying, okay, this sounds great price, but I'm not around during the trading day, I'm working a day job, I'm just happy to be here for this training intraday here, but bottom line is that you're not going to be available all day, every day, I get it. You can auto trade this, no additional charge from us or the brokers, with Thinkorswim, now part of TD Ameritrade, and another brokerage group called Auto Shares, so that you can tell them, hey, I want to put in this much money per trade to make sure you get at least one contract or more, and say, okay, then they say, okay, when we call out a live trade saying buy the Amazon option at this price or less, and we'll then tell you to get out of the Amazon at this price or better, say, you know what, then they're going to get you the entry and exits real time without you worrying about missing out. You could be on the golf course, you could be in a meeting, you could be at the grocery, you could be on vacation, you could be wherever you want to be, and they're still going to be auto trading that, executing it for you. As long as you're a paid subscriber with us, and as long as you haven't turned it off with them, you can do that. One of the things I do tell people is I encourage you to start small and gain confidence in what we're doing here. And so you can start it small in the even like $1,500 a trade range, and know you'll get at least one contract of everything. You can see how many of these in recent times have doubled or better. But bottom line is that even the 50s and 60s and 40s, you can see there's lots of nice steady gains there. And yes, we will tell you when to get out too. And we're also really sensitive not over trading. So like if we have 3 day trades in less than a week, you can see we're not going to do another trade until we get past a 5-day span, so that even smaller accounts would never worry about being considered day traders or whatever. So bottom line is that the auto trading is a great feature to add if you're worried about missing trades real time. These can come at any end of any 30-minute period. So anytime during the trading day, 10 a.m., 11:30 a.m. right now, at 11:30 when that hits in 2 minutes, we may get a new signal, fire the trade in a few minutes. It's possible. But a lot of them come pretty early. But you go to bigtrends.com/FANG options trader. Quickly, I want to show you one other thing. When you hit the add to cart button, that'll get you started. It'll allow you to say, okay, do we want to get the lifetime access to boot camp for just a one-time extra add-on of $100 today, then go back to $99 every 30 days after today's charge? You can do that, or just start with the 99 trade alerts only with the video training I give you every week. That's a great way to get started. We've already taken it down as low as we can. So then you hit the green checkout button. And as you fill out your key information here, we ask for your email twice so we can make sure you're getting the email alerts. But also, once you get your credit card info in, et cetera, if you talked to Chris Sarah before, my lead consultant, you can give him credit or give me credit if you just heard it here on the webinar. You type in the customer note. If you want to get it to your smartphone, you can get text alerts from us at no additional charge. Whether it's from Sprint, whether it's from Verizon, whatever your number is, you type that in. You can say, okay, ATT, whatever. We ask you to put your cell phone provider behind that, because basically then you can see that it'll be a situation in which you know that we're going to get you on the dedicated batch list for this. This is an auto renew program, so we've actually broken out here in green this auto renewal language about how you can cancel if you ever need to cancel. It's also spelled out in our full terms and conditions page, which we encourage you to read in full. Once you've read that, then you've got all your information, and you just click the box that you've agreed on that, hit the green submit order button, and it should charge you $99, and you should be good to go on that. Okay, now I'm out of time. I need to go ahead and hand it over so I can get our next speaker up here. But if you have any questions, also, by the way, I want to mention, you can certainly call us toll free. I'm going to type in our number here real quick. You can call us toll free at our 800 Big Trends number. So I just say, remember 800 Big Trends on your phone here, or you see up there, it's 800-244-8736. Or you can also, let me make sure I get this to the whole audience here. No, it won't let me do it. Or you can also email us, clientcare@bigtrends.com. So definitely feel free to shoot us an email, drop us a toll-free call, 800 Big Trends, or email us, and we'll be making sure to get you set up. Thanks so much for passing that on in the chat, and definitely know that we're here for you. I appreciate being here. Let me make sure to hand it back over so we can stay on schedule. Make sure to hang around for a lot of great speakers to come, and look forward to enjoying a lot of big trends on the FANG stocks.